Hey, good morning, everyone. Welcome to the Macro Snapshot. We are Tuesday, February the 3rd, 2026. Okay, so excuse me. Market seems to have recovered a little bit from some of the sort of the volatility of last Friday with the precious metals space and whatnot. And there's sort of a little bit of positivity coming into the markets. This isn't sort of growth narrative is starting to pick up steam a little bit. And part of that is just because we're starting to get some relatively sort of positive data out of the US. We know that the employment situation is looking quite good in the US, or it's quite solid. It's not collapsing in any shape or form. And if we look at something like the ISM manufacturing surveys, which we had yesterday morning, this is some of the best numbers we've had for quite a long time. So let's just have a quick look at the charts, and you see that the overall number is higher than estimates. So the estimate was 48 and a half. It came in at 52. So you see here that, this one is in expansionary territory and is, if the least we can, the minimal thing we can say about this is that it's quite sort of solid. It's quite sort of stable and seems to be pushing upwards. If we look at some of the subcomponents, new orders was very, very strong. And, some commentators are saying that this sort of is a very strong showing of new orders is essentially signaling that some of the uncertainty around the tariff narrative is starting to dissipate a little bit, and that sort of consumers, companies, everyone's sort of starting to feel a bit more comfortable, starting to go forward a little bit and start placing those new orders. So anyway, pretty positive number here. You also see here that the production, the output was up. We can also see that the employment, even though it's still under 50, so that signals contraction, but it's contracting at a much slower speed. So, one could argue that's a positive trend, not yet super positive, but not too bad. And remember that just in terms of the overall mix of employment in the US, that services is far stronger. So, 70, 75, 80% of the economy. And that manufacturing, which we're looking at here, the manufacturing employment, as you can see, has been going down. So it does look as though it's starting to stabilize a little bit. And who knows, some of those sort of build outs and factories and onshoring, which Trump has tried to be pushing, is that starting to sort of have a little effect? Anyway, relatively good for the manufacturing employment. And then if you look here at the prices index, or see, or also. We'll see a bit of French there. Also, you can see that the prices index coming down. So overall, looking at this sort of services index, pretty good. Manufacturing index, this ISM index, pretty good numbers and quite a lot of positivity. And that's reflected in the stock market. Having said that, it's just also interesting to compare something like this to the stock market, and then look at something like the consumer sentiment. And definitely, we're getting a lot of these sort of stock market and sort of the economic surprises going positive, but on the other hand, the confidence numbers are going negative. So this whole sort of narrative of the K shape is still very much sort of in play. Although what I would say is that if you look, I was looking yesterday at the surprise index, which is the degree of difference between the estimates and the actual outcomes of data, and that is pushing higher. So the surprise indexes, both Europe and the US, are pushing higher. So as I say, this sort of global growth story is starting to look quite good. And yesterday, for example, we have more earnings today, but yesterday, for example, we had after the bell, we had a Palantir, which had been selling off a lot, but Palantir came in with fairly strong earnings and sort of forward guidance. And you can see that as an example, they're up in the pre-market, up to 164 in the pre-market. So that's pretty good for the equities overall. Okay, so just having a quick look at volatility, you can see here that let me just put this on here. So this is the VIX here, and you can see here that the VIX is much lower than it's off the highest levels here. So the VIX now coming down back into the 16s. So that's going to be a positive, at the margin for the stocks. We can also see that gold volatility has come off a little bit. We can see that silver volatility, while still being very, very elevated, and keep in mind that a reading of 84 is still indicating what's that, about a 5 or 6% move every day. That is it has come off its worst levels. And then if you look over in the bond market, you can see that the move it had gone up a little bit, but it's starting to sort of reverse a little bit, and historically, as you can see, is quite good. So overall, volatility has been a little bit more elevated in the last few trading sessions, but in the last 24 hours, it is coming down. So all things considered, that is, a relatively serene kind of sort of situation. Okay, I'm just going to grab some tea here. So just in terms of the technical situation for the US, what I'm seeing is that the US It's doing okay. And again, let's not over dramatize this because just from a technical perspective, we're still above all the moving averages. But you can see that the slope of the moving averages, you can see here the 20 still going upwards and the 50 is still going upwards, but just starting to sort of attenuate a little bit and flatten out a little bit. So it almost seems as though we need some kind of new narrative to push this much higher because the reality is that at this point we're talking. I mean, I don't want to get too technical here, but let's say like a quadruple top, it just seems to be finding it hard to find the energy to push higher. And if we look at something like the Nasdaq, that still hasn't achieved new highs. And you can see here hasn't even achieved local highs, although nothing sort of particularly negative. Just seems to be in a flat situation. The Russell, on the other hand, did recently achieve a high and is looking okay. So the U.S. equity is doing okay. There are still some question marks about sort of the capex spend and whatnot. And it does seem that now it's really sort of in a stock pickers environment where companies which are showing sort of discipline, are showing good cash flow, are showing the ability to monetize their spending on AI, are doing well, and those not are being sort of punished. So it does seem to be more of a sort of a sector, a rotational kind of situation. Different sectors are doing better than other sectors here. And just having a quick look at that, if we look at, let's say, the Mag 7, again, not doing badly in any shape or form, but you can see here the 20-day moving average pretty flat, hasn't achieved new highs for a time being. You can see that the equal weight, the RSP, is doing a little bit better. So sort of a broadening out in the breadth of the market, which is probably a healthy thing. Nothing, particularly nasty there. But what is interesting is global equity is really doing quite well. So if we look at SPY divided by EFA, you can see the SPY is actually underperforming the other developed markets. And if we look at over in Europe, you can see new highs in the Euro Stock 600. If we look at the German, the DAX, still a bit more like the US, but the broader market, the Euro Stock 600 doing very, very well. If we look at the Nikkei, new highs in the Nikkei. Of course, we have the election this weekend. We'll see what happens over there. But it's interesting that in terms of Japan, the Prime Minister's office was at pains to point out that her comments about the fact that a weak yen favored exporters was a factual statement, and it wasn't necessarily an explicit endorsement of a weaker yen. So the market's quite liking those comments. And essentially, that weaker yen, yes, is helping the Nikkei index and the Japanese stock market in general. The Topix also doing pretty well. And keep in mind that if Takaichi, the prime minister, increases her majority, she may be able to more easily implement her sort of expansionary and fiscally stimulative policies, which at the end of the day is probably good for the Japanese economy and the stock market. But again, looking broadly, you can see here that something like the Bovespa over in Brazil still is trading around its highs, doing very well on the commodity story, real assets kind of story, the BRIC story, diversification from US kind of story. So that's doing very, very well. And I mentioned India a few days ago, and the fact that I was a bit puzzled that it was sort of selling off a bit more than most other global markets and sort of emerging, semi-emerging markets. But you can see here a huge pop, a bit of a drop, a bit of pop up to the highs, and that's basically probably on the news that there was some kind of trade deal, no details, of course, but some trade deal announced yesterday between Prime Minister Modi and Trump. And essentially, the Americans are reducing the tariffs down to 18%. They were at sort of 25, 30, and 50%, but reducing those tariffs down to 18%. The idea is that the Indian government has committed to buying, $500 billion worth of investments and also a lot more oil. And as essentially said, they're no longer going to be buying Russian oil, but will be buying US and maybe Venezuelan oil. So the stock market quite liking the reduction in tariffs, and also the general sort of good vibes and positive sort of communication coming out of that Modi-Trump meeting. So it's going to be interesting here to see if this gap is filled in any sense, or whether this is just a nice retracement here, and we see the Sensex over in India and the Nifty 50 kind of pushing to highs again. It's going to be interesting to watch that one. Other global markets, you see that the UK continues to do very well. We can see in China not quite as strong, not quite as strong, but doing okay. And another interesting one is the Kospi. And keep in mind that the Kospi and also the KOSDAQ, like kind of the Korean tech index, we had a bit of a wobble here in the Kospi. And keep in mind that the Kospi is highly, highly correlated to the semiconductors and the sort of the tech indices in general, but especially the semiconductors. And we can see that when there was that sort of wobble on sort of Thursday and Friday, there was some talk that, oh, maybe it's a bubble blown off. But, straight back in, Korean investors, and look at these moving averages, just keeps on going higher and higher. As I said, there was a wobble with SK Hynix and Samsung, but they've picked up things like SanDisk, for the memory chips, are doing very well. Sorry, my throat's a bit dry this morning. Do excuse me for that. Sorry. So basically, the point is that the US equities are doing okay, but I would argue that the biggest story is sort of a little bit of money is bleeding out of the US and is sort of being redeployed in other developed markets and also sort of emerging markets. And we see, if you look at EM, had a bit of a wobble for a couple of days, but starting to push back, and emerging markets, excluding China, even a little bit stronger. So global equity essentially doing well. And as I say, it's this kind of growth story is doing well. And if you look at global equity versus global bonds, pretty strong. So what's also interesting is that like a 60-40 portfolio is doing quite well, and a portfolio which is more heavily weighted in terms of equity and even global equity is doing quite well. So the general sense is that if you own hard assets, if you own real estate, stocks, bonds, commodities, you're doing quite well. If you're just on a basic income, that's where we start getting that K-shaped narrative. So just having a look at over the bonds, you can see in the US here, you can see here that after the nomination of Walsh, there was actually a bit of positivity, but you can see here that on Monday yesterday, we're starting to get a little bit of a sell-off in the front end of the curve. And I think a lot of that's also just to do with this sort of growth story and the fact that yesterday we had very strong surveys, as I said, from the ISM manufacturing. So you see here that the front of the curve is selling off, but also if you look here, you see the 5-year selling off, you can see here the 10-year selling off, and the long end of the curve selling off pretty hard as well. So global bonds overall coming down, the US bonds coming down, pushing up the yields, pushing up that yield a little bit steeper. So, as I say, this sort of, a bit of sticky inflation and our sort of global growth is essentially, it's a relatively healthy, one could argue, but it's definitely sort of pushing the yields up and pushing up the shape of the curve, sort of steepening the curve a little bit. But as long as the data comes in strong, I think, and the inflation remains relatively contained, and the central banks are perceived to be sort of onto it in the sense of sort of combating inflation, I think the equity market's going to be okay with that. Just moving on, if we look at the energy, you can see here that oil sold off. And again, it had a bit of technical resistance on the CL1 contract here at about 65.5. It sold off just because, there was quite, relatively positive communication coming out of the Iranians and the Americans. And this sort of chatter that at the weekend, they're going to start talking about potentially trying to cobble together a nuclear deal. And so, the threat of potential American sort of strikes or military action was sort of softened somewhat, and so the oil market didn't like that. But now is at an interesting point. If we look here, let's have a look and just see at the just the technicals here, because ultimately we had the OPEC meeting. They didn't increase production, and you can see here that oil, although it did sell off, quite strongly. You can see here that buyers came in at the 50% fib, so around about 61.25. There were dip buys at the 60% fib, 50% fib, as I just said. And so it's interesting. Now we just had comments from Novak, who's the deputy prime minister in Russia, also the oil minister, basically saying that he is seeing, there are sort of some inventory buildups in sort of certain fuel products and distillates and whatnot. But overall, he was saying that he thinks the global market is relatively balanced and there could be more demand coming into the market sort of in the spring, March, April, May. So, who knows? Maybe for oil, we have found some kind of base sort of situation. The market thinks that 60 is maybe a little cheap. So, it's going to be quite interesting to see that next 2 or 3 days if the bulls continue to sort of push a bit higher. But as I always like to do, I will, of course, be looking at the hurdles which the bulls must sort of overcome. So if we just look on a shorter term time frame, and I'll break that down maybe to a 4-hour chart for a little bit more detail. one can see here that, bought, as I said, at the 50% fib. And so really what the bulls need to be doing here, they need the first target here, which is going to be showing some kind of positive price action, will be 63.20. Then they need to get it up to the 50% at 63.78. And then really the bullish price action will be confirmed only if and when we get above 64.45. So that's what I'm looking at. So today, just to see how the bulls deal with that. What is interesting, just in terms of the Widowmaker, we can see here that Nat Gas over in Europe had a big sort of sell-off. We can also see that in the front contract for NG1 in the US, big sell-off. If we look at the second contract, also a massive sell-off here. So that's pretty much based on the fact that the weather forecast going into February over the last couple of days. So, the nat gas markets likes to look at those 10 and 15-day forecasts into the future. They're signaling less cold weather, slightly warmer weather, and therefore, obviously, the nat gas market has extrapolated from that less need to sort of draw down sort of inventories, and boom, there we go, a huge sell-off. So, a lot of volatility here in the nat gas, but generally sort of cheaper, which of course at the margin, all of these things being a bit cheaper, oil in some sense in nat gas, is taking inflation pressures away. Okay, just to wrap things up, looking at the dollar here, interesting in FX, the dollar continues to do quite well, and I think part of that is the idea that one could talk about the Fed and wash and whatnot, but I think it's just this idea that, hey, U.S. economy is doing quite well. The data is coming in quite strong. And at a certain point, we have to say, with relatively sticky inflation, with a Fed which is not slashing interest rates at the moment, although, I do believe that Wash will cut, 2 or 3 times by the end of 2026. Hey, like the dollar, why should it continuously collapse? The big macro story is there, but I think there will be some counterbalance with the strong data. On the other hand, just from a technical perspective here, the dollar still, although it has been a nice technical and reactive bounce, let's just stay calm here, because all we've got is a 50% fib retracement from this most recent down impulse. It needs to go higher, and as you can see here, it hasn't even really breached the 20-day moving average. So there's still quite a lot of work for the dollar bulls to happen to do here. And we need to see it, at least pushing above 98, which is 61.8 fib retracement. Let's see how it goes today. Where there has been a bit of price action was in the Australian dollar. And basically, pretty interesting overnight what happened with the RBA. So the RBA, one of the first sort of relatively major global central banks, actually hiked. Okay, so we're talking about the Fed cutting and the ECB on hold and maybe needing to cut because of the euro being too strong. And the Bank of Japan sort of thing, maybe we're going to hike, maybe we won't. We have to figure it all out. The RBA last night actually did hike. So they hiked to 25 basis points up to 3.85%. That was pretty much expected. That was priced in by the futures market. About 80%. So that was expected. And really what the market was really focused on was the statement and the sort of the forward guidance, so to speak. And we got a statement which the market interpreted as being relatively hawkish, as you can see here from the reaction, quite a positive reaction for the Aussie dollar. And there were statements here, and I quote, inflation is to remain above target for some time. So there's a sense that inflation is above their target. So it's now at about 3.4% annualized. They did increase the inflation projection, so the forecast for the middle of the year, but it remained at 3.2% for the end of the year. So it's almost just keep that in mind. They also said in the statement, wage growth remains strong. The job market is showing some signs of tightness. And this is really the bullish thing for the Aussie dollar, although I think it was actually a little bit more nuanced than the market took. Governor Bullock said, quote, we're not sure whether this is a hiking cycle. Nothing is ruled in or out. So take that as you wish. The market took that in a slightly bullish way, saying that, hey, maybe it is a bit of a hiking cycle. Although I think actually it's a little more neutral, and that if the the labor market were to weaken in any sense and inflation were to remain stable, it's not necessarily obvious to me that they want to sort of hike more and more, especially if the Fed is going to be cutting. And also keep in mind, just from a currency point of view, if the data continues to be strong and the US economy continues to be strong, and the Fed is not cutting as, immediately, who knows, maybe we could see, another sort of few weeks of US dollar strength, which will weigh on the Aussie ultimately. The Aussie also is quite dependent on what happens in China, what happens in industrial metals and metals more broadly, and commodity and risk off. So there are some risks to the downside here. And I'll also draw your attention to another part of the statement from the RBA last night when they said, listen to this quote, a larger part of the resurgence inflation is judged to be sector specific and may not persist. And we don't have a strong sort of a judgment about that. So what the RBA is saying is that, hey, yeah, inflation could remain above target for some time, and the job market is tight, but we're not definitely ruling in a hiking cycle. And if you actually look at this last comment, a larger part of the resurgent inflation is judged to be sector specific in terms of demand and price pressure. So what they're basically saying is, hey, we're very much going to be looking at the situation. If we need to hike again, we will do so, but it could just be sort of a transitory sector-specific situation, and inflation actually may attenuate a little bit. So all that to say that a lot of this sort of positivity in the Australian dollar, as you can see here, in my humble opinion, is relatively priced in. The market, just in terms of pricing for the May meeting, is pricing in another 22 basis points of hike. So almost another full cut is priced in for the May meeting. And if you want to go out to the end of 2026, about a 37 basis points. So 1.5 cut is, hike is priced in by the end of 2026. So point being, I think a lot of the bullishness for the Aussie dollar is priced in. Another 22 basis points priced in for May, and a full hike and a half is priced in for the end of the year. So I personally think it's going to be an interesting one here just to see what happens. And let's just look at the fib here to see what the bulls need to be doing. I'm just going to throw this on this one here. So if we look at this sort of impulse here, you can see here that I'll put it on a 4-hour chart. You can see here that although the bulls came in between the 38 and the 50%. So that's pretty strong price action here. They need to sort of push this a little bit higher. And the Fibonacci extension here, the Fibonacci extension is up here. So there is room for more. But what I want to draw your attention to as well is just the immediate price action here. Sorry, the reversal. That's what I wanted to show you here. So if we look here, you can see here that what the bulls need to do is to take it above. So they took it above the 38 and the 50, but you can see here it's starting to stall out on the very short term here, the 4-hour chart at the 61.8 fib retracement at about 70.20. And you can see here a little bit of hesitation. That's okay, but really the bulls need to push it above this level. So that's really the level I'm looking at here, is about this 70.25, 70.30, 70.40 level. The bulls need to push that higher, get above this recent high, and then, okay, for sure, we can have a fib extension. But until and unless they do that, you can see at the first attempt they did kind of fail. So let's keep an eye out for that. Okay, guys, I want to leave it there for today. Have a great trading day. There are some earnings coming in. Let's see if there's any headlines from Trump, if the government shutdown. Of course, with the mini government shutdown, we're not getting JOLTS data today. The non-farm payrolls data from this Friday apparently is not going to be released. Apparently, it may be released next week. We shall see. So a little less macro data. So probably just be trading technicals and any kind of headlines over the next couple of days. Thanks very much. Take care, and we shall. I didn't really look at the gold and silver markets, but essentially they're sort of recovering, consolidating. Personally, I'll be waiting just for a little bit more consolidation before potentially thinking about another entry. And what we can say is that the gold definitely seems to be performing a bit more strongly than silver, and copper also is doing quite well. So gold and copper doing on a relative basis better than silver, and also copper. What I meant to mention is that there was talk from the Chinese government about the Chinese government potentially expanding their strategic copper reserve, which at the margin is bullish, is a sort of a structurally positive thing for copper. So silver still, I think people are still a little bit traumatized by what happened last Friday. Take care. Have a great day. I'll be back tomorrow with the macro snapshot from the macro shop. Thanks very much.